Yo, what's going on, guys? Lottery Stocks here. Today we have a Reddit DD due diligence posted by Warden Elite. If you haven't heard of him, go check him out. He does the best technical analysis around. Where are we now? Where we are headed? And when might the mother of all short squeezes begin? Roll that intro. Alright guys, I'm going to get right into this DD, but if you can, real quick, smash that like or hit that subscribe or even drop a comment. Whatever you guys want to do to help out the video, it is greatly appreciated, and I appreciate you guys tuning in. Let's get into this juicy DD right now. Here we go. GameStop short squeeze. Let's get it, apes. Hey everyone, it's Warden. I'm taking a brief moment to write a chart analysis post because I feel that we are nearing a critical junction point. The volume today has been extremely low, currently sitting around 1.7 million, and I feel that a lot of people are sensing that something big is coming. I've emptied the rest of my bank account into the dip today to buy more tickets to the moon. There's a lot of questions people are wondering at this point. When do we squeeze? What happens at the apex of a wedge? Are there any important catalysts coming up? As the stock breaks out of the wedge, if it chooses to follow the uptrend, it becomes increasingly expensive and impossible for shorts to bring this down any further. We may possibly climb to a point for no return for the shorts. The wedges I will reference in this post are symmetric wedges. Why wedges form and what they mean fundamentally, the long and short thesis. We are indeed nearing the apex of the mother of all wedges. Guys, if you don't know what that is, go check out my price predictions on GameStop. I do show you the mother of all wedges. I don't go over it too clear in my very recent videos, but a couple videos ago, I go over it clear and what it means and when we will break out of it. It looked like a breakout very recently, but it was actually not a breakout. It just made the wedge longer. Let's get back to the DD real quick. Let's examine the simple uptrend. This is when the price forms higher lows and higher highs. Boom, you guys see it, higher high, higher low, higher high, higher low. And this is simply just saying this peak is lower than this peak. So higher high right here, higher low is right here because the low, blah, blah, blah. I probably didn't have to explain that to you guys. And we also know what a downtrend is lower highs and lower lows. Uptrend is called the front side and the downtrend is called the back side. The thesis of people trading the front side is that they think it will go up. For short sellers, they trade the back side because they think it will go down. Now, if you really get a volatile stock, you might end up with a combination of the two of these, with two parties doing different strategies. This is why a wedge forms. Both these are valid, and so both parties continuously trade in the wedge pattern. Now, the short side thesis and strategy looks like this. So short at the peak, down, cover their shorts, short again, cover, and I assume short again until etc. Imagine the opposite for longs. They buy at the dips and sell at the peaks, thus combining these two theses. We can conclude that when the stock moves up, that's buying plus covering. When the stock moves down, that's selling plus shorting. Simultaneously, longs and shorts are both making money because they both have valid theses. One thinks the price will go down and the other thinks it will go up. Why the short thesis is invalid, understanding OBV, the spread, and FINRA's own short volume data. However, there is a big problem with the short thesis for GameStop. Uh-oh, guys. The short thesis is actually invalid. Let's check out this picture real quick. Okay, as you guys can see, this right here is the mother of all wedges. He didn't quite finish it in this picture. I think this is a combination of a lot of pictures, but here it is what he's talking about. This is actually flat. Let's get back to the DD. Notice how throughout the entire duration of this triangle, the OBV is flat on a balanced volume info. Not going to go to that link. Let's check out what he has to say on it without going to the link. Take a look at a normal stock like Palantir, PLTR. When a short thesis is invalid, the price breaks out to the downside after the apex. Palantir in the below picture was a short side success. Notice how OBV falls during a short side success. Let's check it out. So we have the wedges, the OBV declining right here, right when the fall actually happened, instead of staying flat. So yeah, guys, that is pretty weird what he is talking about. or Activision in this case, OBV goes up when the longs win. As you can see, another one, a breakout up and a breakout up, OBV. I challenge you to find a stock that doesn't follow these rules on a macro level time scale. OBV increases, if you guys don't know, if there is more volume during uptrends than volume during downtrends. That means there is greater buying interest, vice versa, or greater selling interest. When there is an imbalance of buyers and sellers at the apex of a triangle, there will be a breakout. This is because at an apex, one of the two trends breaks, either the upside or the downside trend is violated, forcing one of the parties to flip their thesis. So if we go to the upside, the short sellers was flipped to the long side either by buying stock or finally covering their shares to get out and end their thesis in general. So what about the flat OBV? What does this mean? And this is GameStop right here, the flat OBV. In case you didn't know, we were looking at GameStop. I believe it means that throughout the duration of the wedge starting January 24th, which was the first squeeze, nobody was effing selling. It is almost exclusively short selling combined by less covering than shorting by retail buying. And in a way, it's actually an illusion that they are tanking the price. In reality, the real price is whatever the uptrend line is. So here, I think the real price is around $155. We've actually been climbing up at the macro level. I think this has to do with the spread. If you look at the level 2 order book, you see the highest bid is 160.6 and the lowest ask is 160.74. There you go, guys. The bid chart right here. GME 160, 160.72. It's probably up at the top. I'm not going to press the page. The goal of short selling is to tank the price, yada yada yada. The only way to profit from short selling is if people sell more than they buy after you short. Thus, you probably can't make money if you short millions of shares, because eventually when you cover, you lose money from the spread. B, the price is already increasing from an excess of buyers, which is what's happening with GameStop, guys. Furthermore, what's even worse is that the daily short volume percent is greater than 50% on average. Crunched FINRA's own short volume numbers and concluded that the majority of daily volume was short selling. Here's his tool for grabbing historical data. If you guys want this link, I'll drop it in the description. And if it's not in the description, just hit me up in the comments, guys. To remind me, I'll pin a comment with the link. Keep in mind, FINRA both underreports short volume and the total volume, so the data we have is limited and unreliable. There is a probability that short volume might be less or greater than 50. I might have been able to find, sorry, not less. There is a chance that it may be greater than 50. I have not been able to find other data sources that can confirm or reject this analysis. First, we realize that they cannot really profit from shorting the downtrend. And second, despite this fact, they are shorting more than half of the daily volume. Ouch. Now let's tie in the last two pieces of the puzzle. So how can there be a flat OBV if there is an excess of buyers? I believe it's because the bid has been hit so much more than the ask from the short sellers that it had caused the price to be artificially lower than normal. Thus, there's an increased number of days that the stock ends in the red, decreasing OBV. I believe that the OBV is actually trending upwards. It's an illusion that it's flat. So what he's trying to say, guys, is the volume in GME doesn't show selling pressure. The OBV is actually staying flat to look manipulated, that we are in a current downtrend. What he's saying is actually we should be in a current uptrend because no one is actually selling. It is being shorted. But that is his opinion. Take this with a grain of salt. Whatever you guys want to believe. Obviously, you're watching this video watching retail investors because retail investors help other retail investors. The rich help the rich. We don't listen to the press and the bad articles saying GameStop is going to dip, blah, blah, blah. They don't know what they're talking about. Let's get back into this, DD. We are not losing this fight. We are, in fact, holding strong and buying. That is a fact, guys. Holding strong, diamond hands. Institutions are holding so far and perhaps actually buying. Tiny subset, Q1 13F updates that will be filed before May 17th. I will be closely watching every day to see what the majority of institutions are doing. I believe May 17th will be a very important deadline for us to find the new data. So great. Everyone is holding thus far. Shorts keep shorting and the spread and buyers are killing them, LOL. So pretty much, guys, we are really winning this fight as long as we buy, hold, or even just hold at this point. They're literally just losing money sitting here trying to come up with a game plan, hope we get bored. It's not happening, guys. It's really not happening. And you can see the DTC, SEC, and SEC is all putting rules out, filing new rules to make sure their backs are safe. They don't care about the hedge funds. They know something big is coming and the banks are buying up. They know something big is happening with AMC and GameStop, and that's just all it is. And if the people say, "Oh, we don't trade those stocks," that's dumb. You sound stupid. They don't know what they're talking about. Just kick them out of the room. They really clearly don't do their research, guys. Back to the DD. Sorry, I'm stuttering. I got a little bit agitated right there. After the apex, shorts will drown. After the apex, the downtrend breaks. Shorts will be forced to create a new downtrend. If they haven't given up, they'll likely react with a large short attack and attempt to establish a downtrend. So here we go, guys. A breakout to the uptrend and a short ladder attack, and back into a slow uptrend and cover, short, uptrend, cover, short, etc. However, given that GME is hard to borrow, they can only short a limited amount of shares, and because people won't sell, the shorts will be stuck trying to short into an uptrend due to the excess buyers. This is the short staircase, the establishment of a new uptrend slightly below the apex that will slowly choke the shorts to death. So guys, if you don't really understand exactly how, first of all, there is a low borrow rate for GameStop for the hedge funds to short. If you don't know, to short a stock, there needs to be shares to be able to borrow. So if you have 10 shares and you end up selling two to just to profit, say GameStop hits 500, right? And that's your peak, because no one can time the peak, right? That's why people are saying sell on it down. Say that's your peak, right? You sell all 10, and then a hedge fund then has 10 stocks that he can short, and they're not real stocks. So even if someone else buys them before he can short them, he can still short them. Those are borrowed stocks. So what this is pretty much saying is this can happen unless they have no shares to actually short. So if there's no shares to actually short, they can only short this down so much and cover and short down so much and cover, etc. So these waves wouldn't actually be fully up, fully down waves. It would more likely be up, barely down, up, causing the squeeze, if that makes sense, guys. If you need a different analogy, ask me in the comments. But here we go. This picture, let's see what he got for us. So right here, a wedge, a breakout. Oh, this is Tesla. Short staircase and short squeeze, bears up. There we go. That is what it looks like, apparently, for his idea of a squeeze. And you guys can see right here, he didn't even put it, but the OBV going in an uptrend. Let's get back to the DD. Both options are out of the questions. The catalyst might actually be the chart itself. Not so much a fundamental change in the company, but a fundamental change like a new CEO can certainly light the fuse. Summary, too long, didn't read. Wedges form because longs and shorts both see a profitable strategy. Shorts are not able to profit because of the spread and the excess of buyers. OBV is flat because everyone is buying and holding. The price might drop after the apex, but an uptrend will form that will smother the shorts. Eventually, they will panic cover. Bloomberg shows recent institutions and buying and holding on average. And the important stuff. After the apex, the short thesis of being profitable from shorting becomes invalid, if not already. May 17th is an important date. It reveals the poker hand of the longs, as 13F Q1 filings are due by then. If they are still holding, then shorts are doomed. The price isn't actually decreasing from these short attacks. It's actually steadily increasing. The drops are an illusion. So guys, remember, do not sell, buy, hold, not financial advice. Keep an eye out for May 17th as a new jump day, a new spike day, or any type of price action. Just keep it in the back of your mind. Thank you guys for watching. If you've taken anything in from this video, please slap a like on the video. Please consider subscribing, joining the fam, and talk to me in the comments. I love you guys. Lottery Stocks out.
One shot, he drop like a hooligan. How we gon' get to this bag when we focus on gunplay, but trapping is all that we got. All of us gon' make it one day like church.